Okay, traders, if you haven't watched my introduction video, please make sure you watch it after this, because that might change your whole trading journey at some point. Okay, let's start this premium technical analysis course. First, we'll start with a quick introduction to candlesticks, what they are and how they work. In the next few videos, we'll go deeper into the different types of candlesticks and key patterns, and how you can use them effectively in your trading. Okay, let's dive into the lesson. So what is a candle? Let's take a stock as an example. Or let's say a crypto coin. Look at this line chart. Let's say at 12 o'clock midnight or start of the day, the price of this stock is $20. Then by 6 o'clock a.m. in the morning, it goes down to $10. Then by 12 noon, it went up to $50. And by 6 o'clock evening, it came down a little bit to $40. Then finally, at the end of the day, at 11:59 p.m., it ended at the same value at $40. So this is the price variation that happened with this stock during that day. I'm sure we all have learnt this kind of line chart in our schools, and this kind of chart will clearly emphasize the variation of the price of this stock during that day. But using this kind of a chart is difficult when it comes to trading, because we cannot get a very clear understanding or clear picture of what really happened behind it. Which area sellers had control? Which area buyers had control? Which area market had a consolidation? We can't get any sort of idea by looking at this line chart. Anyhow, later on, something called candlesticks was introduced by one of Japanese traders, which made our life way more easier. Now this is the candlestick with the same information which we saw on the previous line chart. Now let's try to understand some key elements of a candlestick. The starting price of the day, according to this candlestick, is $20. We call it the opening price. The last price of the day, or the price at the end of this day, we call it closing price. According to this candle, it is $40. The highest value this particular stock reached on that day, we call it high of that day. According to this, it is $50. The lowest price it reached on that day, we call it low of that day, and according to this, it is $40. So these four prices are very important when it comes to trading. The open, close, high, and low. They are very important elements. Now, if the opening price is lower and the closing price is higher than the opening price, then we call it a bullish candle. Let's look at the example we had before. Now, the price or the value of this stock has gone up on that day. It started at $20 and ended up in $40. So it has gone up, and we call it a bullish or bull candle. Doesn't matter whatever the time frame we talk about. And the normal color of a bull candle is green. But remember, depending on the different platforms and based on how you want to see the candles, these colors can be changed. You might see different color candles in some videos on YouTube, so don't get surprised. They have changed the colors of the candles. If the price has gone down from the opening price, we call it a bearish candle. Let's go to a live chart and take one example. This is Solana. I'm sure you all know about Solana, one of the top crypto coins. There is still got some time left here, but this is just an example. So look at this red 30-minute candle here. It opened up at $202.48 and went up here at $202.89. Then has fallen down up to $202.22. And eventually it has come up a little bit up to $202.38. So we call it a bearish candle or bear candle, because the value of this coin has gone down within that given time frame. And the normal color of a bearish candlestick is red. Now when we say a candlestick chart, by looking at this candle, we can have a very clear picture of what happened during this particular time. So the charts we use to trade today are made of a collection of these red and green candlesticks, or in other words, a set of bull and bear candles. So the reason we use these candlestick charts to analyze the components, because they provide us a bigger picture over other chart types. And they have given us the opportunity to use different types of indicators on top of those charts, which we cannot use on line charts or any other chart types. Okay, let's go to TradingView. This is the normal platform everybody uses for analyzing the charts. But remember, there are other good platforms as well. For the time being, let's use TradingView. Over here, we can change the time zone to match with whatever the region we want. And here we can select our desired time frame, which we are going to analyze the chart. We can see the price of the component here. I'm not going to talk more detail about TradingView, but we will talk about it later. Let's select a component. We take Bitcoin, and over here, we select daily time frame. As you place your cursor on top of any candle, the four important values we discussed earlier, open, close, high, and low, will appear on the top over here. These numbers give you the exact price movement for that specific candle. On a bullish candle, the opening price is always at the lower end of the candle. Example, this bullish candle. This is the opening, and it's on the lower end. On a bearish candle, the opening price is always on the upper side of the candle. Example, this candle, the opening is here, and it's on the top side of the candle. Why is this important for us? Bitcoin and other cryptocurrencies trade 24 hours a day, 365 days a year. On all cryptos, most of the cases this candle's closing time, and next candle, opening time is same. This is the close of this candle, and this is the open. If we bring our cursor on top of it, closing value and opening value is more or less same. Hope you understand that, and they are simple things, but very important. Anyhow, there are components in these markets like stocks and forex pairs. They only run during weekdays, and most of the time, the closing value is not same on the next week opening value. Let's look at an example. This is the most traded forex pair in the world, euro-dollar. As you can see, its closing value on this week's Friday is here, and the next Monday opening value is here. That's what we call a gap, and normally market will come back to that price region to fill these gaps. Anyhow, let's look at another example. This is the popular Apple stock. The market closes at 9 p.m. evening time and opens at 2:30 a.m. morning next day. Look what happened. Depending on various fundamental reasons, the opening price has changed. If you've only been trading crypto up to now, just keep in mind, these kinds of trading elements exist in other markets. Now let's go back to candles. This is the Bitcoin chart daily time frame. Let's take this candle. By looking at this candle, we can't get a deeper idea of what happened with the price during this day, or how the value got changed during this 24 hours. We can see open, close, high, and low values. But other than that, we don't really know how the price behaved during this day. So to get a better understanding, we can go to lower time frames. If we mark it here, we go to a 4-hour chart, and it will be like this. This is where the day opened, and this is where the day closed. If we go to 1-hour chart, it will be like this. It consists of 24 1-hour candles, which give us a more detailed picture. Let's go to 15 minutes time frame. Look at this chart. Price has gone up, gone down several times during this day, and we can see a very beautiful detailed picture of how Bitcoin has played out. So it's same on all other components. It doesn't matter whether it is crypto, forex, or commodities. We can go to lower time frames and look at more detailed picture of what happened during a certain time frame. I hope you got an idea about how candles getting their different shapes during different time frames. Doesn't matter whether it is a bull or bear candle, it goes both up and down during that time to provide the end result bull or bear candle. So get some idea about it, and let's learn more about candlesticks and how they are formed from the next video. This channel we talk about cryptos, forex, stocks, and all other markets in the world. If you want to learn about trading from the scratch, this is the channel for you. You will find live examples of market manipulation, videos about psychological aspects and all the hidden secrets happening behind these markets. You learn how the markets trap you out and why you lost your hard-earned money so far. Please watch my introduction video. I will put the link below the description, and it might change your trading journey in future. Keep in touch, and thank you.